Here's the shocking truth that nobody in the trading community wants to admit. The biggest enemy of your profits isn't market volatility, it isn't economic news, and it definitely isn't some secret algorithm working against you. The biggest threat to your trading account is sitting right there in your chair. It's you. More specifically, it's your inability to control the urge to constantly press buttons. What I'm about to reveal will completely flip your understanding of successful trading on its head. While everyone else is frantically clicking buy and sell orders like they're playing some twisted video game, the traders who actually make money are doing something radically different. They're sitting back, arms crossed, watching the chaos unfold. And here's the kicker, they're making more money in a single well-timed trade than most people make in 50 random entries. Today we're diving deep into the psychology behind overtrading and why it's the silent killer that's been draining your account without you even realizing it. By the end of this breakdown, you'll understand exactly why less activity often equals more profit, and I'll show you the exact framework that separates amateur button pushers from professional profit makers. But first, let me paint you a picture that might hit uncomfortably close to home. It's Monday morning, markets just opened, and you're staring at your screens with that familiar itch in your fingers. The charts are moving, colors are flashing, and somewhere deep in your brain, a voice is screaming that you need to do something, anything, to participate in this action. Sound familiar? This is where most traders start their journey toward account destruction. The overtrading epidemic isn't just a minor issue affecting a few undisciplined traders. It's a systematic problem that's wiping out accounts faster than any market crash ever could. Studies show that retail traders who make frequent trades underperform those who trade less frequently by massive margins. We're talking about the difference between growing your account and slowly bleeding it dry over months or years. Here's what's really happening when you overtrade. Every unnecessary entry you make isn't just risking your capital on that specific trade. You're creating a cascade of psychological pressure that affects every decision that follows. Your brain starts operating in panic mode, constantly seeking the next opportunity to recover from the last mistake. This creates a vicious cycle where each trade becomes more desperate than the last. The mathematics behind overtrading are brutal and unforgiving. Let's say you're risking 1% of your account on each trade. If you take 20 trades in a week because you can't sit still, you're exposing yourself to 20% potential loss for what might be mediocre setups at best. Compare that to a disciplined trader who waits for 3 high-quality opportunities in the same week, risking the same 1% per trade. They're only exposed to 3% risk while potentially capturing much better risk-to-reward scenarios. But the real damage goes beyond simple math. Overtrading creates what professionals call decision fatigue. Your brain wasn't designed to make dozens of high-stakes financial decisions every single day. Each trade you take depletes your mental energy, making the next decision slightly worse than the previous one. By the end of a heavy trading session, you're basically making choices with the analytical capacity of someone who's been awake for 36 hours straight. The most successful traders understand something that beginners completely miss. The market doesn't care about your need to feel productive. It doesn't care that you've been staring at charts for 4 hours without taking a trade. It doesn't care that your trading buddy just posted a screenshot of their winning position. The market operates on its own timeline, creating genuine opportunities when conditions align properly, not when you're feeling bored or left out. This brings us to one of the most dangerous psychological traps in modern trading. Social media has turned trading into a performance sport where everyone feels pressured to constantly showcase their activity. Traders post screenshots of their entries, brag about their daily trade count, and create an environment where doing nothing feels like falling behind. This social pressure pushes otherwise rational people into making irrational decisions with their hard-earned capital. The irony is that the traders making real money are often the ones posting the least about their daily activities. They understand that consistency comes from selectivity, not from constant action. Think about this for a moment. When was the last time you heard a professional surgeon bragging about how many operations they performed in a single day? Or a professional pilot posting about how many flights they squeezed into their schedule? These professionals understand that quality trumps quantity every single time. Yet somehow in trading, we've created this backwards culture where more equals better. The reality is that overtrading stems from a fundamental misunderstanding of what trading actually is. Most people think trading is about predicting market movements or finding the perfect entry point. Wrong. Trading is about probability management and capital preservation. It's about waiting for scenarios where the odds are stacked heavily in your favor, then executing with precision and confidence. Here's where things get really interesting. The human brain is hardwired to seek immediate rewards and avoid boredom at all costs. This worked great when we were hunting for food or avoiding predators, but it's absolutely devastating in modern financial markets. Your prehistoric brain sees a moving chart and interprets it as an opportunity that might disappear forever if you don't act right now. This ancient survival mechanism becomes your biggest liability in a game that rewards patience above all else. Let me share something that completely changed my perspective on this. Professional traders often measure their success not by how many trades they took, but by how many trades they avoided. They keep detailed records of setups they passed on, and more often than not, those avoided trades would have been losers. This selective discipline is what separates the professionals from the gamblers disguised as traders. The compounding effect of overtrading goes far deeper than most people realize. When you're constantly in and out of positions, you're not just paying transaction costs and dealing with spread erosion. You're training your brain to make impulsive decisions under pressure. You're conditioning yourself to prioritize action over analysis. You're essentially rewiring your neural pathways to fail at trading. Every successful business operates with clear systems and processes. Restaurants don't serve every customer who walks by on the street. They wait for customers who actually want to buy food and can pay for it. Successful traders apply the same logic. They don't chase every price movement or jump into every setup that looks remotely interesting. They wait for their specific criteria to align, then they act with conviction. The most profitable traders I know have what I call strategic boredom tolerance. They can sit in front of their screens for hours, watching price action unfold without feeling any compulsion to participate. They understand that the market is constantly offering trades, but it's only occasionally offering good trades. This distinction is everything. Here's a practical exercise that transformed how I approach trading. Start tracking not just your winning and losing trades, but also your emotional state before each entry. You'll quickly notice patterns. Trades taken out of boredom, frustration, or FOMO almost always underperform trades taken from a calm, analytical mindset. This data becomes your early warning system for overtrading episodes. The solution isn't complicated, but it requires a complete mindset overhaul. Instead of measuring success by activity levels, start measuring it by process adherence. Instead of celebrating trade frequency, celebrate trade selectivity. Instead of feeling productive when you're busy, feel productive when you're patient. This mental reframing is the foundation of sustainable trading success. Building this discipline requires practical systems and rules that remove discretion from your decision-making process. Set specific criteria for trade entries that must be met without exception. Create cooling off periods between trades. Limit your maximum number of positions per day or week. These constraints might feel restrictive at first, but they're actually liberating because they protect you from your own psychological weaknesses. Remember, the goal isn't to eliminate trading altogether. The goal is to transform from a reactive trader who responds to every market twitch into a proactive trader who only engages when conditions strongly favor success. So, here's what it all comes down to. Overtrading isn't just a bad habit you can ignore. It's a systematic destroyer of wealth that's probably been sabotaging your results since day one. Every time you've clicked that buy button out of boredom, every time you've chased a move because everyone else was making money, every time you've convinced yourself that more trades equal more profits, you've been working directly against your own success. The traders who actually make it in this game understand one fundamental truth. The market rewards discipline, not activity. It pays those who can sit still when conditions aren't right and strike decisively when they are. Quality will always destroy quantity in trading. Always. Your journey from overtrader to profitable trader starts with a single decision. The decision to stop treating your trading account like a casino and start treating it like a business. Set your criteria, follow your rules, track your emotions, and most importantly, learn to find satisfaction in the trades you don't take. The market will always be there tomorrow. Your capital won't be if you keep burning through it with unnecessary trades. Stop overtrading. Start overperforming. Your future self will thank you for making that choice today.